Guys, am I audible?
Yeah, you're audible, Vaqar.
Thank you, Marish. Is the screen changing? Can you see the screen changing, Marish?
Yes.
The slides are changing? Oh, okay. Thank you. So we will be starting in the next couple of minutes. Some participants are still joining in. We'll wait them for join. So good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. I hope everyone is doing well. And before we move ahead, let me give a disclaimer that the securities that we discuss in today's session should not be considered as a recommendation for buy or sell, and is just for educational purpose. So without wasting much time, let's start with how Nifty 50 behaved during the day. So Nifty had a gap of opening of around 70 to 80 points, and it continued to trade higher for the next couple of hours, and it had registered a gain of around 1.1 to 1.2% during the mid hour of the trading session, and it made a high, intraday high of around 16,025. Then Nifty came under selling pressure as the US futures was nearly 300 points of highs during the afternoon during India's afternoon session. After that, Nifty made a low of 15,785, but found support near the 21 DMA. So the 21 DMA is around 15,811. So it found support near there and managed to close slightly above the 21 DMA, which will now act as a good support for Nifty going forward. Talking about the market breadth and the top gainers and losers, it was kind of balanced for today, as 1053 stocks advanced and 1025 stocks declined. So the advanced decline ratio was in around 1.03. Talking about the gainers and losers for the day, the top gainers were Shree Cement, Power Grid, Bajaj Finserve, Hindustan Unilever, and the top losers were HDFC Life, ITC, Wipro, and Maruti. Earlier during the day, Nifty Metals was in a strong rally phase and was up by 2.4% during the afternoon session, as China had announced $75 billion of an infrastructure fund, which is positive for the metal companies, be it ferrous or non-ferrous. The top gainer during the day from the metal space was Hindalco. It was nearly 5% up intraday before the selling pressure came in. So let's talk about the sectoral view. So, barring Nifty Metal and Nifty Pharma, all of the other sectoral indices declined. So you can see Nifty Metal was able to slightly hold its gains, and it's around 0.3% higher from the around 2.4 to 2.5% gain it was holding during mid hour of the trading session. Even Nifty Bank, Nifty Auto, Nifty Financial Services, and Nifty FMCG was holding well during the day before the selling pressure came in, and all of the indices, barring Nifty Metal and Nifty Pharma, closed lower. Nifty Media and Nifty IT closed the lowest by around 0.9% and 0.7% lower. So Nifty continues to remain in rally attempt. And what I was talking about earlier, the pink line, let me annotate it. So this part. Nifty found its support at the 21 DMA. So the 10 EMA and the 21 DMA, the short-term moving averages are moving very close to one another, and hence Nifty found its support near that region. Going forward as well, these lines or these supports level will act as good supports going forward. If Nifty breaches these supports, it can be a problematic scenario going forward. If Nifty then breaches the recent lows of 15,183, then Nifty will move back to downtrend. However, if the global indices remain supportive and going forward, if Nifty moves higher by 1.5% or more, that is a follow through day on volume higher than the previous day, Nifty will move to a confirmed uptrend. So talking about some key business updates that were released during the day. So Tata Steel even released its Q5 FY22 update. So the India business production increased by 6% to 4.92 million tons. Europe business production declined by 9% YOY to 2.4 million tons. Talking on the deliveries front, deliveries declined by 2% YOY due to moderation in exports. That was expected on the lines of imposition of 15% export duty. But the domestic deliveries increased 5%. Industrial segments performed decently well for Tata Steel as it increased 8% on account of increase in value-added products. The standout in deliveries was the auto segment. So the deliveries to auto segments increased by around 22% YOY as all the segments showed good broad-based recovery. Talking about the other peer, the Tata Motors JLR sales update was, for the month of June was released, and Tata Motors JLR UK sales went down by 14% YOY and was up 12% month on month to 5,305 units in June. So the global shortage of semiconductors and high inflation had impact on the JLR sales even in the month of June. But the situation for semiconductors is improving, and the sales on month basis you can see has improved as well. Semiconductor inventories across the globe has been increasing as well. So it is a good sign for auto industries going forward. Talking about IEX June update, IEX June volumes increased by 17% YOY to 8,267 million units, and Q1 FY22 volume increased 10% YOY to 23,437 million units. So on the IEX front, the day ahead market saw a degrowth of 5% YOY. On the other hand, that term ahead market or the daily or the weekly contract market increased by 18% YOY. So today, Rupee hit an all-time low of 79.38. Consistent FI selling plus the recently released CAD data for the month of June showed a widening of CAD YOY. So the India's trade deficit widened to $25.63 billion in June from $9.61 billion in June 2021, mainly on account of rising fuel prices, which added to the depreciation in your rupee. On the euro front as well, the euro with respect to euro USD, so the euro USD is also at a 20-year low, mainly on account of recession fears in your European region as well, because of the Russia-Ukraine crisis, which has led to your gas prices at a multi-fold high. So talking about a chart of the day, so the chart of the day for today is PVR, and it should not be considered as a buy or sell recommendation, and we have been discussing just for educational purpose. So recently the PVR had announced a capex cycle of opening about 125 screens in FY23, which is even higher than it had done in pre-COVID year of FY19-20 of around 87 screens. So why it's doing capex expansion, or why it's increasing the screen count by a huge amount of 125 is because it's seeing audiences coming back to theaters after the third wave of COVID-19. Companies are also expecting the overall business in the coming quarters to grow on the back of increase in the ticket prices as well as the spend per head, as they've seen occupancies reclaim to pre-COVID levels, which is a big plus. And the future lineup for the upcoming movies also remains strong. The merger with Inox is also expected to get completed this fiscal, according to management. Uh, so now on the ratings and the technical front, uh, the buyer demand is still B, which is good, and the RS rating of 74 is fair, but the line is improving, which is a good sign. And the number of funds and the share held by funds is also improving consistently quarter on quarter. If you look at the base formation, it's a consolidation base of stage two. And just on the right hand side, the stock is showing some good blue bars, but the stock is still 6% off highs, which is a good sign that despite the market correction, it is holding near its highs. But what we always stress about is the market direction. So when the market comes under pressure, 3 out of 4 stocks tend to follow the market direction. During the morning session and even till the mid of afternoon session, PVR was trading in the positive territory. But as the market came under pressure, if even the PVR stock came under pressure. So the stock is still 6% from pivot and is trading well above its key moving averages, which is a good sign. So let's see if the market remains supportive and how the stock behaves around its pivot. So thank you. And Mahesh, you will like to add something? Can we continue?
Okay. Thanks for the update. Can you guys hear me?
Yeah, Mahesh, you're audible.
Audible, right?
Yeah.
So two things, one on the macro front and one on the micro front. Obviously, on the macro front, Vaqar mentioned a lot of data points. 2 days before, if you see the data points, and I was trying to look at the internals of these data points as well, cement production, steel production, GST collection, trade movement have been very, very good. So it's been very, very strong and very, very robust for the month of May. The second data point, which was a positive, was scheduled commercial banks net debt, or the gross or the net NPS, as we call it, right? Trickling down from GNPS to net NPS. They've actually come down to 5.9%. So that's a significant drop that we've seen over the last 2 years. And the third aspect, in terms of our external debt to GDP, that came to 19.9% compared to 21.4%. And the fourth angle, in terms of the indirect tax and the direct tax collection, specifically in terms of GST, a small portion of that is because of inflationary factors as well, but still it is showing a significant trend. So those are the positives which we are probably deriving, where the rest of the world is probably getting ingrained into slower growth and data points which are looking far more concerning at this point of time. And as a lot of analysts on the street are begging, whether we've got a recession, whether a soft or hard one, we'll come to in the next few months. On the negatives, as Vaqar mentioned, for April to June, the trade deficit actually came at $70 billion. For June, in particular, our trade deficit was $25 billion. The only silver lining in this entire data point was that textile exports actually showed a good amount of increase year on year. And IT services probably held up. But the other angle also is that with such a high trade deficit, you are probably expected to see further pressure coming on the rupee, which has already hit an all-time low. Euro is struggling at 1.06, which is a 20-year low against the dollar, and the dollar index is significantly moving higher. The third element obviously becomes that if these elements keep on expanding, right? In the month of June, what the government introduced by ways of windfall tax was primarily because crude imports actually increased in the month of June by 98%, and gold imports increased by 169%. And therefore, I think the government logically put in that windfall gains tax on crude and also increased duties on gold as well, because you have to curb any sort of imported inflation that can put further pressure on our trade deficit and consequently on our current account deficit, which can now touch 3% or 3.1% in this fiscal. What it also does is it rubs off the borrowing program in a significant way, because what you've also probably seen as an offsetting factor is that the excess liquidity, which was almost 5.5% a few months back, that is almost 1.4%, and that can in fact trickle down further. So that can have huge impact on two aspects. One, the entire government borrowing mix, which is on the same level, and on the private capex cycle as well, because excess liquidity as it gets sucked out and higher interest rate regime, which basically mean more pressure in terms of private capex. So government capex might continue, and therefore these macro factors need to be balanced out locally. What happens in Eurozone, what happens in the US in terms of data points, they are worsening at this point of time. Turkey hit a huge inflation, 78% increase in the month of June. You've probably seen rate hikes being carried out across the Eurozone, right from Central Europe to Western Europe, significantly, and the ECB will significantly increase rates in the coming months. What kind of an impact will that have on demand, corporate earnings? I think that's something that we probably need to see, right? So that's the macro element. Now, on the micro front, earnings season will start in the next few weeks. IT companies are obviously feeling the heat on two counts. One, in terms of wage increases, and two, the entire currency tailwind, because the rupee is depreciated, does not completely pass through because they've hedged the rupee against the dollar at a certain rate, and there is some cross-currency impact as well, which removes the entire impact of the dollar depreciation against the rupee as well. On the other hand, what you're probably seeing in terms of order flows, though consistent at this point of time, if they start trickling down, you're probably expected to see further pain which might happen in terms of how these companies are valued. So let's see how numbers come out. Let's see whether we get a follow through day, because all these aspects are very, very important. As we discussed yesterday, there is a fair amount of sectoral rotation that is happening. As we discussed yesterday, some auto angs are still getting reflected in the list. There are a few capital good proxies which are also getting reflected in the list. But this will move very, very fast as the markets keep on churning and the markets keep on gestating all the new data points that are getting thrown at them. So I think we are in for the result season. A lot of macro data coming through globally, and a lot of micro and macro data coming through on the Indian context as well. So I think let's be a little bit cautious here. Let's wait for that FTD to come through, as we have time and again for the sake of repetition saying. But on the TraderSmith platform, there will be opportunities which you are trying to gauge and trying to get in, get out very, very fast without having a bias in terms of carrying these positions for too long. So again, monitoring the lists, as I said, in terms of the near growth, near pivot, week out, breakly, new RS line, and monitoring these data points, which will obviously be giving it to you every day, both in the morning and the evening, so that we all remain abreast in terms of what is happening globally and locally. I think that should remain very, very helpful. So that I think I'll end my remarks here, but Vaqar is pointing you out to the lists. See what is probably coming through and what is getting satisfied in terms of canceling parameters, as well as how volumes are playing out in terms of price volume action as well. So TraderSmith team is obviously updating you. If you guys are not on the TradingSmith platform, obviously you'll get access to that as well if you get registered on the TraderSmith thing. We're trying to take few positions, as I said, through the TraderSmith thing, but on MSI, we are still on the sidelines waiting for the FTD, because there is a lot of uncertainty happening across the globe at this point of time, reflected by the equity markets. So thanks, guys. Be safe. It's raining very, very heavily in Bombay. More rains expected over the next 2 days. So venture out very, very carefully if you're staying in Bombay. Stay safe. Take care.
Thank you, Marish. Thank you for the update. So that's it, guys, and stay tuned to this space as well, and as well do connect with us for the pre-bell show. That is the pre-bell with William Moon in India at 8:45 a.m. sharp every day.